All right, Brandon, it is a wild week. We are actually jumping in outside of what I regularly had scheduled because of the changes that have happened this week. Let's just jump into it, my friend. What's going on? Talk to me about the pause of the CFPB. What are your thoughts?
Yeah.
What's on your mind?
Lots of thoughts, LaDonna. Is this like one of those breaking news updates? Don't you have to play a noise and then put a scroller at the bottom of the screen and catch everybody's attention?
Max Convos. Here we go.
It's a crazy time. It's a crazy time. And you hit the nail right on the head. CFPB is the buzzword this week. Although for the last couple of weeks, I don't know if you've been paying attention to some of the chatter coming at the state level, specifically out of the state of Maryland. About a month ago, almost a month ago now, they made an announcement where they clarified a rule change that they had made with regards to requiring secondary market participants to obtain an NMLS license in order to purchase and sell residential loans in the state of Maryland, which wasn't really groundbreaking or earth-shattering news. I mean, most of the investors, at least from what I can gather, are dealing with it. I don't think it might be a bunch of, what's the saying? Much ado about nothing. But I think where this gets really interesting is in the landscape of this week's announcement, which started actually at the end of last week, LaDonna, when President Trump fired Rohit Chopra from his role as the head of the CFPB and then put in the Treasury Secretary, Scott Bessent. And Bessent came out and said, we're going to halt all work that the CFPB is doing. And so what I'm hearing now from some of the people that I trust is we'll probably expect to see states kind of step up to the plate a little bit more and in a bigger way when it comes to regulation, at least in the short term, which at the end of the day, you and I have both been around this business for a long time. We've been talking about things like trigger leads and these bad actors in the industry that are doing things that they shouldn't be doing. And we know the rules. The CFPB has clearly outlined the rules of engagement in mortgage lending, and there's still people breaking the rules, even with the CFPB active in the space. And so do I really think it's going to dramatically change things? Probably not. But I think what's really exciting is just kind of white knuckle, like hold on tight and let's see what happens over the next couple of weeks and months as all of this unfolds.
Totally agree with you. What I don't want to see happen, though, and let this be kind of those words of caution, is just because the CFPB is paused, it doesn't mean, like you said, that the states aren't going to still be enforcing their own actions.
Yeah.
So don't think of this as a complete dismissal. It is not that. Make sure that you are still abiding by those state and federal regulations, without a doubt.
Totally.
It's just there's some changes on the horizon.
Yeah. And maybe there aren't, right? We're just in this period of like, hey, hit the pause button, reset, let's see what happens, right? There could be changes, there might not be changes, but let's just pay attention. I think that's the message that we can get out is put your ear to the ground, keep your eyes on the prize, and just pay attention to what's going on around you as mortgage and real estate professionals, because there's changes occurring.
Perfect. I couldn't summarize it any better than that. Brandon, as always, you are an absolute dream. Thank you for staying so on top of everything. I appreciate you, as always, so much. For Next Convos, I'm LaDonna Lockard.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.